Hey traders, welcome to the markets in 3 with me, John, senior market analyst. I'm here to give you the latest news in Forex markets as well as some key charts to watch. And today I'm taking a look at gold for our chart to watch because we have the FOMC meeting minutes coming up tomorrow, and that could impact how gold plays out for the rest of this trading week. So what are we looking at in terms of gold prices? If we have a look at the chart, we can see that we're hovering above that $4,000 level of support, which is just this one down through here. We can see towards the end of June, price came into this support zone in here, rebounded, formed that nice little double bottom pattern, and since then price has made its move higher, breaking through that neckline support. So if we are looking at this from a technical perspective, if I go down to a 4-hour chart here, we can see that double bottom pattern in a little bit more detail. We can see the market try to make a new low and failed, and then price came and broke through that neckline. So if you were looking at this from a technical position only, you'd potentially be looking at this neckline as an area of support, and you'd be looking to potentially go long in and around this area, or looking for ideas to go long around this area with an idea to potentially break above this trend line resistance and perhaps back up into the daily support zone around about that $4,375 level. But we need to talk about the catalyst. We need to talk about what fuels this move in gold to the upside, if there is. And the one narrative at the moment is that the US dollar has been slightly weaker. So if we take a look at the US dollar index, I don't like this as a proxy for trading gold, but just to kind of highlight dollar's strength at the moment, we can see we're in a bullish trend here. The market has been making higher highs and higher lows and could continue to push to the upside. The only kind of thing in our way at the minute are these kind of highs on the weekly chart around about that 101.75, where we saw these highs back in the 12th of May of 2025. So that area there is a sticking point for US dollar prices at the moment. We are coming down into an area of support. So if we were to see this hold and the price move back up to the upside, obviously that could have a slight impact on gold prices. Now, to check that US dollar strength, one thing that I like to do is look at the US bond yield. Now, if we take a look at the 30-year yield, we're seeing those starting to crunch a little bit higher here. We can see that the 10-year as well starting to make its move back up to 4.5% after reaching lows of 4.3%. But the 2-year, the one that I'm really looking at, the short end of the curve here, still remains fairly high. We're still around about that 4.1%. And considering the fact that the US interest rates are around about that 3.75 to 4, then we've got this above those interest rate levels, which still suggests to me that the market is still pricing in that potential for interest rate hikes right now. Now, there's another thing that we can look at, obviously. I'm just going to bring it up here, which is the CME Fed Watch tool. Okay, now if you're unfamiliar with this tool in particular, then it's something that you should really check out if you are trading Forex markets, because this is telling us the probabilities of a ease or no change or a hike to come in the next meeting and future meetings. Now, you can see here at the moment, probabilities of no change is quite high. We're at 74.9%, call it 75. The chance of a hike, though, is 25%. Now, we can take a look at what it was priced a week ago, a day ago, etc. So if we take a look at a week ago, for instance, there was only a 66.9% chance that we were going to hold, right? So that's a lower chance that we were going to hold, okay? There was actually a 33.1% chance that we were going to see a hike. So what is this showing us? Well, it's showing us that actually interest rate expectations for a hike are going down. Okay, so we were at 33% last week. We are now at 25%. That could be a potential for the US dollar to weaken on that information, because it suggests that actually the central bank is unlikely to hike interest rates. Another thing we can look at when it comes to gold prices is inflation. Okay, so if we go to indicators here, you can come down to inflation rate on tradeandeconomics.com, and we can take a look at the United States. Now, headline annual CPI, so CPI year on year, is higher. We are trading at 4.2% at the moment. Okay, but that has obviously been down to the fact that oil prices went higher. So if you type in, let's see if I can get Brent crude oil on the chart and compare the two together, Brent crude oil went through the roof because of the Iran war, right? You can see it from this chart here, where you have the grey line that's moving higher, and you've got inflation rates that start to move higher with it. But look what's happened to oil prices since. We've dropped from, $91 per barrel. Well, actually, it was up towards the $110 per barrel, all the way down to $72 a barrel now. So headline CPI should start to come in lower, which is on next week's agenda. And if that is the case, then is that going to be the thing that fuels a move to the downside for the US dollar? Because it will show us that actually headline inflation rates are coming in towards that target range of 2 to 3%. So we're going to be looking to see how that impacts markets going into next week. But the other thing we need to look at as well is the core PCE price index. Now, this is the preferred method of looking at inflation rates, right? Why is it the preferred method? Because this comes down to personal consumption, right? This is down to people actually using their money in the economy, right? And you can see that that has also risen. If I go back to sort of 5 years data here, we can see that it's similar levels that we had in 2021 of May, 3.5%. We're just trading at 3.4% now. If that starts to climb, and if that starts to be persistent, that's when the Federal Reserve will really begin to act, because that shows demand in the market. What we had recently was more of a supply shock when it comes to oil, whereas now we've started to see that oil price fade. So, and we've just recently had OPEC come out and talk about increase in supply again of oil. So oil prices could come down even further. And then we've got core PCE, which is suggesting that it is on average at the moment climbing higher. So if we start to see that little bit of a demand coming off, we start to see headline CPI coming in lower as well, that could benefit the gold price. Okay, so one or two things need to happen really. We need to start seeing the short end of the yield curve start coming in lower. That will drive dollar weakness in the markets, and ultimately we'll see gold prices continue higher. Okay, and at the moment we are trading above that support level. We're trading above that $4,000 level. So it just suggests that we could see a little bit more upside. Okay, if the market comes in here, find support, you could look to potentially be a buyer up towards this $4,375 area. However, what if that's not the case? What if the FOMC meeting minutes tomorrow talk about how hawkish and how aggressive they're going to be with interest rates to bring down inflation? Then we could start to see the market pricing the opportunity of more rate hikes. So the probability of hikes could go even further. And if that's the case, then the likelihood is that we'll see a move back down towards the $4,000 level on gold, and perhaps even a break and continuation to the downside. So we have to be a little bit careful with looking at gold prices at the moment. If we are going to trade it, and if we do like this little breakout and we do expect dollar weakness, then looking at long ideas here isn't a bad idea. However, we have to do it at a lower risk because of all the macro events around. So your typical risk would be, I guess, sort of 1 to 2%. Maybe let's reduce that. Let's reduce that to 0.5%, maybe even lower than that, maybe even 0.25%. And then if the market starts to go in your favor, then you can start to add into the position, manage risk on your original position, X, Y, and Z. So take a look at gold. It technically is looking pretty good. Is it going to continue though? That's the question we need to ask ourselves. We need to keep an eye on the inflation rate expectations. We need to keep an eye on those bond yields. And we also need to keep an eye on what's happening in CPI world, oil prices, etc. Okay, so that's my chart check for today. We talked about gold and how you potentially look at that move. The next one we're going to be talking about is the RBNZ. So this is all to do with the New Zealand dollar. Okay, so I've been looking to potentially get short New Zealand dollar the past couple of weeks. Hasn't worked out last week because we were in that sort of phase 2 on this daily chart. I'm looking for an option for the market to start trading lower again. I thought we were potentially there. Recently, we had this kind of like break in these sort of trend line supports through here, and the market has technically formed a new lower low on the 4-hour chart, so this could potentially be a lower high. So we could be looking for potential shorts for a continuation. Again, on the New Zealand versus the US dollar front, that would mean that we need the US dollar to remain strong. So there might be a different option to sell the New Zealand, and that could be against the likes of the Great British Pound, which we can see is already kind of breaking through areas of resistance. Okay, so we talked a little bit about pound Kiwi yesterday and how there's a potential to be long on this market, but we were looking for deeper retracements back to the 2.31 handle. Current price is trading around about 2.35. So maybe this is not the one to have a little look at. Maybe we could look at something else, maybe even Euro Kiwi, for instance. Maybe even New Zealand yen potentially as an option as well. But essentially, what could happen tomorrow? So when we look at the latest communication from the RBNZ, let me just bring over a couple of tools here. Okay, so we can take a look. Let's click onto the RBNZ. So there's a 77.5% chance that we are going to get an interest rate hike in tomorrow's meeting. Current rate is 2.25%. We're expected to see that go to 2.5%. So what are the statistics kind of around what's going on? Now, the RBNZ has been a little bit more sort of hawkish recently. The tone essentially has been a bit more hawkish, and that's down to the voting pattern that we had previously. So you can see here, we've got some text that says the majority of RBNZ bankers are neutral, dovish 0, neutral 2, hawkish 1. The overall tone is neutral because the majority of recent comments from the RBNZ officials indicate a balanced view of monetary policy with a focus on data dependence, and that's important, and the need to assess both inflationary pressures and economic growth. While there are concerns about rising inflation and the necessity of potential rate increases, particularly highlighted by Governor Bremen's remarks about the OCR needing to be higher going forward, there is also significant caution regarding the economic outlook and the impact of tightening financial conditions. Okay, the comments reflect a recognition of both upside risks to inflation and downside risks to growth, suggesting the RBNZ is leaning to a wait-and-see approach rather than committing to a hawkish or dovish stance. So that means that the market is poised for a bit of a neutral stance at the moment. We're expecting a hike to come. They've talked about that. It's pretty much priced in the fact that we're getting that interest rate hike. But the implications of that interest rate hike on the rest of the economy, on growth in particular, is something that is concerning. They think that maybe if they hike interest rates too far, that actually we could see a technical recession in New Zealand. And again, we can go take a look at some sources to kind of help us, give us a picture of what's going on. So if I go to indicators here again, and we take a look at inflation, we can come all the way down into New Zealand and have a little look at what New Zealand inflation is saying. If I can find it on here, of Australia, let me just go to countries, come down to New Zealand, and we have a little look at the inflation rate. So the inflation rate at the moment is 3.1%. That has been climbing over the past few quarters. We can see that Q4 of 2025 was 3.1%, Q1 of 2026 was 3.1%. So it has been on a slow increase over a period of time. Okay, the previous ones before that were 3%, 2.7% before that, and 2.5% of Q1 of 2025. So we are higher from where we were a year ago when it comes to those. And again, that is exactly why they are talking about potentially hiking interest rates further to bring this in lower. You can see actually Trade and Economics forecast for Q2, which is due on the 20th of this month, is 4%. So that means expectations of inflation is higher. That's why they've got to look to hike those interest rates. But it might come with a bit of a dovish tone. Okay, it might just be coming a little bit of a wait and see approach. So when I take a look at the New Zealand dollar in that sense, New Zealand dollar is one of the weakest currencies around at this current moment in time. So if we do see a hike, which is technically, I think, priced in, then everyone else will be looking at that as a potential buying opportunity. But that might not necessarily be the case, because if the RBNZ central bankers come out and then start to discuss the fact that they are going to be more data dependent, they're going to wait to see how this impacts inflation and also growth, because they are concerned about the economic growth, that could be a negative. Because if a central bank is concerned about economic growth, that's, for one, it's not positive talk, but for two, that could lead to cuts in the future. Okay, so again, from a supply side shock, they are taking action by hiking interest rates, but is it at a point where it's already at a decent area? Potentially. So we've got one or two options. If they come out and they are more hawkish and they do say they expect inflation expectations to be a lot higher and they are going to hike again in the future, this New Zealand dollar weakness narrative might be shifting. If they come out and say, we are going to stick data dependent and there's going to be no chance of hikes in the future, or cuts are even not off the table, that's a little bit more dovish in their tone, and we could essentially see the New Zealand weaken. Now, technically, the dollar is still a stronger currency, so I don't mind selling New Zealand US dollar, but we need to be cautious because we do have that risk event on the horizon. So keep an eye on your Kiwi. Could be a really, really interesting market to watch going into tomorrow. Okay. So let's move on to the skill of the day. The skill of the day is a part of the show where I like to show you a skill or an up level for you to help you understand currency markets in a little bit more detail, or understand your platform X, Y, and Z. So today I'm going to talk a little bit about margin and what margin is and how you can understand it a little bit better. Okay, so margin is the margin that you borrow from your broker. Okay, so it helps you take a bigger position within the markets. Okay, so think of it as a little bit of a booster, right? Because capital markets, it takes so much. If you were to go to sort of the central hub or even futures markets, for instance, where you don't get leverage, you need a lot more capital to get going. Okay, so what a Forex broker does is it gives you that extra capital in terms of margin to help you get into these positions and to essentially allow you to trade in the currency markets. Okay, that's why they talk about margin and leverage and things like that. So margin can be a little bit of a misunderstood sort of thing, because trading on margin is risky, but also helps you to get into some positions in the markets. Okay, so a lot of the times what I see from traders is the fact that they come into the markets and they want to try and double, triple their account straight away. So what they'll do is they'll come in and they will, buy, gold, for instance. Gold, a very popular market to trade, and they will do it with 100% of their account. Okay, well, or 80% of their account at least. What will happen then is they'll go offside, their trade will get cut, and then they're wondering why the hell that has happened, because it's got nowhere near their stop loss. That's because of their margin level. Okay, brokers put in place margin levels to help you and stop or prevent you from losing all of your capital, even though it can happen. And if the market was to slip, for instance, on a big news event or things like that, that can happen. But they put these tools in place to stop you from doing that. You'll also maybe have heard something called a margin call. And that's when you've used up too much of your margin, the broker will send you information out to say, hang on a minute, you're using too much of your margin here. If you don't close your position, or if your position doesn't go back in your favor, we will have to close you out, because they're trying to protect your capital. So a lot of it is just a little bit of jargon that you can get through, margin call, stop out, all that kind of stuff. But let's talk about a little bit what you can see here. So we actually have multiple different things that you can see on your platform. So this is the MetaTrader 4 platform. This is a live trading account. And what you get in terms of information is your account balance. So this is your total balance that's currently in your account. Your equity. Now your equity is your current open P&L plus your account balance. Okay, so you can see here right now, my current account balance is $24,755 US. And then I am currently in an open position or a couple of open positions, which equate for $45 US in open P&L. That's why you're seeing $24,800 US in equity right now. Okay, you can see next to that it says margin. Margin is 287.66. What does that mean? That is my risk in the markets. Okay, and just to show you that, let me go to the US 500 here. I'm in one position on the US 500. Let me just move. Let me just see which stop is in play. Okay, so it's this one in here. So let me just say I'm risking, and let me just show you how that moves. There you go. So I'm risking about $100 there on our margin. Okay, let me just quickly see if I can bring something up for you. Go 1 second. I was going to see if I could bring up the presentation, but for some reason doesn't want to open. Why won't it open? Come on. Okay, well, it's not opening for some reason, but essentially, margin is the required amount of capital that you need in order to open a trade. Okay, so that's why it's saying $287. That's the minimum amount of margin I'll need to open a position. You then have your margin level, which is obviously what is your open position plus the percentage. So every margin requirement will have a percentage attached to it. Okay. I really want this presentation to open, but it's not opening for me. Okay. Well, we'll move on from the presentation and I'll have to come back to this. But it's important for you to know what margin is. It's just basically the amount that you need to open a position within the market. If you have too little margin, then you won't be able to open a position, okay? And the platform will stop you from doing that. If you have a stop out or you're close to margin, then there is a possibility that the broker will take you out of that position, okay? So I'm going to leave it there, guys. I hope this presentation loads up and I'll present a little bit more to you next time. But essentially, the margin requirement is the amount of margin required to open a position, and it is expressed as a percentage. So you'll see that there. And the required margin, the amount of money that is set aside, locked up when you open a position. Okay, so those are those two numbers that you see down the bottom. So I'll come back to you with this. Hopefully my presentation loads, and then we can talk a little bit about margin trades in the future. I don't know why it's doing that, but yeah, I'll come back to it. Sorry about that, guys. But I hope you enjoyed the stream today. We talked a lot about the New Zealand US dollar. We talked about the upcoming RBNZ interest rate decision. We've also talked about gold as well, potential breakout opportunities on this forming. So keep an eye on those. We do have the FOMC meeting minutes coming up tomorrow, so be aware of that. And we also have the RBNZ meeting too. So if you are trading those, be careful. See you soon.